Nigerians' digital banks are no longer small players. They move trillions, they serve millions, and now the Central Bank of Nigeria is stepping in to say, if you act national, you will be regulated national. Opay, Moniepoint, and Kuda, their licenses have just been upgraded, and this move could reshape Nigeria's entire financial system. But is this a step towards safety or the beginning of tighter control over digital money? Ladies and gentlemen, this is Nation Multimedia, your go-to channel for deep, honest news analysis. If you care about Nigeria's economic, digital banking, and where your money really sits, subscribe now, like this video, drop your thoughts in the comments, and share it with someone who uses FinTech app daily. Now, let's break this down, simple and clearly. The Central Bank of Nigeria has upgraded several FinTech companies and microfinance bank to national status. This decision was announced at a banking operation conference in Lagos. The reason? These FinTech were operating across Nigeria, but their licenses didn't reflect that reality. In simple terms, they had local licenses but national influence. That gap became a regulatory risk, and the CBN decided to close it. For years, FinTechs filled the gap left by traditional banks. They reached traders, farmers, transport workers, and rural communities. People's Bank ignored. But growth came faster than regulation. When transaction failed, customers didn't always know where to complain. When issue arose, accountability became blurry. The CBN is now saying, if you operate everywhere, you must be answerable everywhere. National license means stricter rule, higher capital, and closer monitoring. On paper, this reform should protect users. National FinTech must now meet higher capital requirements, maintain physical offices in key areas, follow stricter KYC and compliance rules. For everyday Nigerians, this should mean fewer excuses when money disappears and faster resolution of disputes. At least, that is the expectation. But there's another side to this story. Higher capital requirement could push out small FinTechs. Less competition means fewer choice and possibly higher fees in the future. The danger is simple. Regulation that protects the system must not kill innovation. The balance is delicate, and Nigeria has failed it before. One major reason for this move is Nigeria's cash problem. Too much money still lives outside the banking system. FinTech agents already handle massive cash flow daily, especially in rural areas. The CBN believes regulated FinTech can help bring this money into the formal system. But regulation alone won't build trust. Without transparency and enforcement, Nigerians will still prefer cash over apps. We've seen fines before. We've heard promises before. What matters now is consistency. Will rules apply to everyone or only when convenient? Will customer protection be real or just policy on paper? This reform will fail if enforcement fails. This upgrade is not just about licenses. It's about who controls Nigeria's digital money, who protects the everyday users, and whether regulation can finally match reality. The CBN has made its move. Now, Nigerians must watch closely, because in a digital economy, speed without rules is chaos, and rules without fairness are oppression. Thank you for watching Nation Multimedia. If this analysis gives you clarity, subscribe, like this video, comment with your opinion, and share it, because financial awareness is no longer optional. See you in the next one.